Good morning, everyone. It is Thursday. Yeah, Thursday. Thursday, January 6th. And this is Morning Market Movers, where we do live analysis for day trading. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. And as you can see, I am coming to you from the very, very cold city of Chicago. Look at this fun new background. It is a whopping 6 degrees outside, and that's without the wind chill. So today's going to be a fun day to take the dog out for a walk. Now, we do have some things moving around the markets clearly. Yesterday, we got the hawkish Fed. They're going to, the timeline for speeding up interest rates and winding down the balance sheet. They want to crank that up, and the time frame is going to be compressed. Inflation's gotten out of control. They've indicated it. What did we see yesterday? We had a washout yesterday. Equities all got hit. The NASDAQ the hardest. Risk assets where they're not accumulating any interest. So you've got gold, tech stocks, even the cryptocurrencies absolutely got annihilated. I mean, more than 10%. You're seeing that people are getting out of those assets. We're seeing a little bit of a support in non-tech stocks this morning. So the Dow, the broader S&P, where the tech stocks aren't weighing them down, there's a rotation going on. Oddly, we did see oil take off again. So we've got a bit to talk about today. Before we jump into it and I turn it over to Brian, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, so Brian, I'm going to flip it over to you. Let's talk about what the Fed had to say, what we saw happen, but then let's jump over into the charts because I think there's going to be some opportunity, across the board, whether it's looking for a bottom in gold, a top in oil, even in the tech stocks. I mean, they still want to sell them off, but there's probably some place where buyers will step in.
Yeah, I mean, it wasn't super surprising. We knew that Kashkari talked about how there'd be 2 raises this year, so we were already kind of expecting. And if you guys listened yesterday, we were kind of prepared for a lot of this. I think that what they came out with, I think the foreshadowing that we saw ahead of time was kind of the telltale sign. They did come in slightly stronger than what I think most people expected. Like I said, I think it was a rather expected, but then I think the level that they came in with or some of the things.
That was
talking about how they no longer need to do it. It's not necessary because of higher price pressures and a stronger labor market. Remember yesterday we were talking about that's been like the kind of the linchpin forever. It's like, well, wait a second, the labor market, Yellen's like, oh, look, we can't do anything in the labor market, right? I mean, the numbers we saw yesterday, again, the Fed is acknowledging it. We have a stronger labor market now. So that was kind of the last thing. It's like Django with all the blocks, right? All the blocks are gone.
Hey, by the way, I'm kind of curious because we do have the non-farm payroll tomorrow, which we'll talk about. What is there a chance that we could see a surprise to the upside from that number, or do you think that's already been kind of factored in?
No, I think it's probably factored in at this point. And like you said, I mean, labor is one thing, but it's not going to be. I mean, remember, non-farm is what happened already. The Fed is what is about to happen.
Right. Forward.
Yeah, so it'll probably assist depending on how much of a retracement we have today. It'll probably help. I mean, everybody's expecting it to be a big number because of the other one that we saw. Last time it wasn't as big as what the ADP number was. So, it may not, unless it's like crazy negative, it should just kind of help the markets retrace back to where they were.
All right. Sorry. All right. So yeah, let's.
But, some of the notes that were in here, it says it may be warranted to increase the federal fund rate sooner. Again, that's what really tanked the markets and at a faster pace than participants had early anticipated. That's the big piece. And again, that's what Kashkari was talking about. And then they also talked about how we need to reduce the Fed balance sheet relatively soon after beginning to raise federal fund rates. So they've been talking about reducing it, but they're saying after we start raising the rates. It's like, oh, how quick are we raising rates? And then they talked about it over here. They said, we have, a strong commitment to address elevated inflation pressures. Again, 39-year high. I mentioned that's what everybody's talking about. So now the labor kind of, blockade is gone. They're talking about we got to reduce everything. There's no need for us to purchase it. Everything is up there is good. And some of the trades that we talked about yesterday, we knew they were going to come in strong, but again, this is a little bit stronger. And most of the trade setups that we talked about, all if you guys were watching the Aussie, we were talking about it all week. Aussie just collapsed through the floor. Now, all the indices did the same thing, and that we said that was if they were hawkish, look to get short before the news. Here's the VIX. Reason I'm showing you the VIX is because here's when the statement came out. It just jacked the volatility, and you can see this is the largest candle, largest run we've had. Even these days, it's like, oh my god, that was so negative. This is a much bigger run. Okay, and again, it's very important to understand this. This is how big the run is. If I pull it back, there is nothing in here. None of these big days. Here's almost this day here is almost a big day, but again, it was crushing the volatility, which you expect. Volatility crushes happen faster. It's like everything's good, and again, that was on December 15th. So it was the last FOMC meeting where they're a little bit weaker. So with that said, we are at kind of a peak now. We are putting lower lows in. We are putting lower highs in. We do have an area up top. And really, if you look at what the news is today, we have unemployment claims, which came in slightly higher than expected. Again, it was supposed to be 199. Some places are like saying, "Oh no, the forecast was 185."
Yeah,
and they've adjusted a little bit. 207 is not that much different. It is a little bit higher. Remember, we did have record people leaving their jobs in November, so when you have 800-something thousand people getting new jobs, the unemployment claims aspect is not as big. And again, 200 is about what the average is, I think. When you look at pre-COVID levels, that's about normal. Now, ISM services are coming in. I expect this number to be a little bit odd. But again, on a regular given week, ISM services would be an important figure. It is at 10 o'clock today, so if there's still negative pressure in the morning, that would give us a good rollover point to go higher today. But for the most part, and again, there's that Aussie trade if you guys were watching it from yesterday. I think right now with where the VIX is, I think that the VIX is probably going to start retracing back down because now we know what's happening, right? Before it was, oh my God, what are they going to do? And it's like, wait, they're going to start doing all this stuff. Now it's in. People have been able to digest it for a little while, and it's kind of like, okay. What are people doing? Our company's still making money, and as we push back down again. So, right now you're already seeing the Russell and the YM both in the green already. The ES just is a little bit 0.03, 0.04. Just a little bit tiny negative right now. The NQ is still down, and a lot of that is because Apple and Tesla still have that kind of gap a little bit lower. And again, I think where Apple was with being, at their high, they had 1 day of profit taking, which was expected, and then FOMC drove it down again. Now what you're seeing right now with this gap a little bit lower is you're seeing a lot of the indicators out there saying, oh my God, Apple's a sell, look at this. And we see two gigantic days down. There's nothing really out there that's really hurting Apple right now. I would say that there's no big major pressures. Tesla, kind of the same story. Tesla's, again, big after a big burst up, kind of did the same thing. Again, yesterday, they were holding firm. They opened right before FOMC. It was basically right exactly where FOMC was, and then they got crushed just like everybody else. But like in Tesla's case, we are sitting in an area where we've had gaps before. I mean, we bring this across. The first time we had the gap, it touched and went. We gapped again, touched and went. From here, went again. So it is in levels where there are buyers back in the markets. And again, the cat is out of the bag. We know what FOMC is doing. Now it's going to go back to, okay, they're making money. Is there profits? What's coming next? So it's kind of rolling back again. So typically whenever you see a gigantic move like this, you're thinking parabolic retracements. We're going to go back to the origin of the move. We know that non-farmers tomorrow, so it's not like Thursday tends to be a big driver as far as news goes. Today would be the day for it to grind back down again. If it stays high, then it's probably setting up for more for non-farm tomorrow. But if you look across the board, I mean, obviously the dollar, we talked about it. There's your move, right? It went straight up based off of that news. If you look at everything else across the board, you look at gold. We talked about gold coming back down to 1,800. Well, it's at 1,789 now. It continued to use 1,800 and drop lower. And I've warned you. I said if they're going strong with this one, gold is a great hedge for inflation when it rises. When they are crushing inflation down, you want to get out of gold. And this is why. And again, you're seeing people leave gold, right? Because again, now the goal is to crush inflation because the dollar is rising. Silver down 3%, 3.5%, and coming down to new levels, down at 22. Guess what else? Cryptos.
Yeah.
Bitcoin got crushed. Ethereum down 3.6%. Okay. Dogecoin is down at about 16. It's 15.9 right now. TLT bonds also not necessarily good. Why? Because the dollar is very, very strong again. So, it's kind of one of those things. It's just a normal pattern that we've been seeing. And again, a lot of people are like, well, wait a second. I mean, their dollar. I mean, we don't want that. Again, this is why cryptos are very dangerous because at the end of the day, the central banks are controlling these rates. Massive amounts of money will come into the dollar when they start raising interest rates.
Right, it's
That
gonna we're gonna get this rotation. So
yeah.
what I want to do is I want to jump into the charts and what can we be looking at today
hmm
for probably the equities is where we'll see it. I'm not sure we're going to see a bounce in gold or silver, although
mm
we could. I think equities is probably
there'll
where
be
you're
some
seeing it
profit.
plays
Yeah,
out
there'll be some profit taking, but remember, gold is one of those kind of more institutional size trading vehicles. Silver, you'll probably find a bit of a bottom in silver today, but I would say most eyes are going to be on the indices. After this long gold push again, they're rotating those assets out of gold to kind of get their profits. Silver again will always have a higher move, and again it's about double right now. The indices again, now that ES is back in the green today, I would be looking for long opportunities, looking for pullbacks in the next 15, 20 minutes on there, dropping them all down to a 15-minute. Let me see. Yeah, you can see where some buyers are, and again, you got buyers here, buyers here, buyers here, buyers here, buyers here, and we're kind of pulling into that right now. I wouldn't be surprised if there's a little bit of negativity still left over. But for the most part, if you look, this drop happened so fast, really not a whole lot of slowdown. I think, again, overall, I think we can go back up to 2250. And again, YM strong. It's got a little bit of a hiccup at around 36,500. It is pulling right. It's pulling back right now in this last 15 minutes. Again, going down to a level where we did see buyers. So, I mean, again, buyers are in here as well. NQ, NQ it's down zero point 0.4. But if you look at it, it's been lower than that. It has stabilization down at this level, and it's hit it here at 1 o'clock in the morning, and then it hit it again at 7:45 and it's bouncing. So, I think it's kind of in the same scenario. It's pulling back. Apple and Tesla start rallying up today. NQ should bounce about up a fair amount higher. I would say the first testing level would be 15,800 right here, where we had this kind of test. And ES has kind of rolled back down again, but is it really trending right now? Not really. It found buyers down here, and again, we had this level marked off. This 46, 68. It was an old level in the past, and again, that was the. I mean, if I bring this across, I'll just draw another one, probably easier. You guys can see that there was already a trade set up from this reversal, and right, 1 to 3 is right there. So yeah, we're well out of that zone at this point. So again, if we do have any pullbacks, I would say again, watch this level at 46, 68, 75. But there is more near-term levels. We're on a 15-minute now, and you guys can see that there are levels sitting kind of right in here as well. So I would say any of these pullbacks are probably pretty decent to look for buying opportunities. And again, the ES is the one that's kind of on the fence, but you're seeing YM. Again, YM is going to be basically the overall economy, right? Russell is the little guys. If the little guys are already up after a day where they said they're going to raise interest rates, they're going to lower balance sheets, that tends to be the first mover. NQ again, I think NQ right now is saddled with Apple and Tesla. I think that will have opportunity today, but that's going to start off the weakest. But the chart looks exactly the same. Buyers right below where we are right now. Again, parabolic moves from FOMC yesterday, and like I said, the cat's out of the bag. We know what they're going to do, and kind of when they're going to do it. But now it should roll back to okay, but that's not here yet. Let's see. Are they still a good company? Are they?
Right. The more fundamental. I mean, yeah.
Yeah.
Now we're going to go back to more fundamentals. Are these companies making money? Are they turning a profit? Against is that out trade between the economy and and the stock market? Is there another? I mean, I guess what I'm trying to figure out is there another shoe to drop? I mean, are they going to try to wash out
Not
weaker
today.
hands?
Yeah, not today. Not today. All eyes will jump across now to non-farm employment
Tomorrow, right?
And again, we're at 426 unemployment rate of 4.1. They're going to talk about that, but as I mentioned, that's not really a real number. And again, the average earnings. I mean, that'll be kind of something to look at. So right now, I would say it's really you're looking for reversals of everything that we saw yesterday, depending on what it is. After those lower time frames, and again, the ISM number coming in right at 10 o'clock today is probably a good thing. They'll have the initial kind of retail trader push from 9:30 to 10. And then again, once this number comes out, the market will kind of react as the larger forces. Yeah, the larger forces will be looking at the services number, which again, it's expected to be negative. What if this comes in a bit higher at 68? The question is, were they too negative on this services PMI? And again, I expect services to struggle a little bit more because of with COVID, things locking down, Omicron, 10 days, 5 days, 3 days, 8 days. They changed the CDC supposedly changed it again this morning. Every day, it's just gonna it's amazing. You can put pressure and change what the scientific guidelines are supposed to say.
Yep.
I don't know.
So I did drop that link in. If anyone, you want to be watching that at 10 a.m. Eastern when that number comes out, because that could be impactful to the markets. Normally, it would be I would say it's a much more significant number, but today there's going to be a lot of the washout from yesterday and some potential anticipation for
particularly currencies.
Yeah.
Yeah, I would say particularly look at those currencies. I mean, here's the Aussie. We were projecting a target lower. If you guys remember, I talked about setting an alert on Aussie yen. Aussie yen came up, grabbed the alert, and then you guys can see blew through the first target, based, which you guys know when we base in a prior level that's been hit, we're looking for shorts. It went down again, grabbed this other level, Harry Potter,
Did a
the other
typical
one,
Harry Potter move down. Yeah.
and we talked about 82.62. And I'm willing to admit when I'm wrong. I was wrong. I missed the 82.62 by 7 pips, 7.2 pips. But when we called the original target from yesterday up top, it did run 157 pips to the downside. And again, with multiple different areas. And if you know how to trail, if you know how to dynamically trail, you wouldn't have gotten stopped out until all the way over here. It was a gigantic move. Again, 145 pips down before your manual trailing stop would have got taken out. So big moves in all of them. And like I said, everything's pretty even, but I would look for the dollar reversals. And again, pretty much look at dollar index. You can see that it spiked up and magically it's all coming back down again. And with a level of basing the racetrack,
Yep.
some more dollar weakness today.
All right. With that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, you can email Brian at support@keeptradingsimple.com. Definitely a lot of movement yesterday. A big washout on the Fed being much more hawkish. Not going to say it was surprising. Maybe the timelines on it was a little bit surprising. And what we're looking at today is potential retracements now that the news is out. And then we'll be setting up for the ISM number today at 10 a.m. and non-farm payrolls tomorrow. Although I think, it's unlikely that those numbers are going to be as significantly impactful as they would traditionally be, mostly because the Fed really kind of stole everyone's thunder yesterday. Everyone's digesting that, and we'll see where it goes from there. Do I have that about right?
Yeah. I mean, typically there's that one big release a week. FOMC changing the entire economic environment, kind of a big deal.
they shook up the cart pretty well, didn't they? Mm-hmm. With that, Brian and I will catch you again tomorrow morning. Everyone stay warm, stay safe, and good luck in the markets. Thanks for joining. We'll catch up with you tomorrow.